Hello everyone, and welcome to another HPD video, fundamental analysis video. This is being recorded on the 3rd of March 2025, the start of the week, the Monday, and just like usual, we're going to explain the fundamental analysis that's happened in the previous week and the fundamental analysis coming this week too, as well as having a look at the charts, looking at the different indexes and giving our own biases on the on each currency and economy. And just another heads up, this is not expert advice. We are not financial experts. This is just our own biases as traders. So with that being said, let's get straight into it. I want to begin with the VIX. So this week, the VIX, which is a measure of market sentiment. So it really, if it's another little breakthrough for those who are new to the channel, if the VIX is above the 20 level, it really indicates a risk off sentiment, while if it's below the 20 level, it's risk on. So when it becomes risk off sentiment, when it goes above the 20 level, currencies like the United States dollar, like the Swiss franc, like the Japanese yen, gold, these are considered safe havens, and they tend to appreciate in risk off environments, whereas in risk on it's the opposite. But obviously, it's not guaranteed. It's just seasonalities really. It's just really how history is repeated. And so having a look this previous week, we've kind of really been either just below or just above the 20 level, the threshold. And one of the main reasons is because of what's going on with the world, the Ukraine situation, the United States situation, tariffs. Right now there's a lot of uncertainty with tariffs, as well as there's a lot of uncertainty with the situation with the Ukraine war between the United States, between Ukraine, between Russia. So I won't be surprised if this week also the VIX remains around the 20 level, or even surpasses it, goes above, and really becomes a risk off sentiment. And so speaking of the tariffs, the tariffs on Canada and Mexico are meant to happen tomorrow. There's a lot of, just like I said, there's a lot of uncertainty. There was one mention that it was going to be put on April, possible April. Like here, Trump shows confusion last week when he mentioned a possible 2nd of April deadline. However, now he's saying Tuesday, so that is tomorrow, as I'm filming this on the Monday. So, honestly, it seems like tomorrow is going to happen, or at least tomorrow, the 4th of March, will be an announcement regarding the tariffs, or regarding the future of tariffs for Canada and Mexico. So definitely, I would expect some type of reaction from the United States dollar, from the Canadian dollar, from the Mexican is an exotic, so we don't really trade I don't really, HPD doesn't really trade the Mexican pesos, but yeah, definitely some movement in the dollar in Canada. Canadian dollar will occur. Having a look at the previous week of quantitative analysis, we can see the main big events were the German federal elections, with the far right party not overperforming as expected, because of I forgot which one it is, a CDU party. A coalition is very, very likely. A swift coalition will boost the euro upwards of value, and there's the euro actually has been appreciating a lot, as you can see. One of the main reasons is because of the government spending of the German government spending, and I do believe I had it somewhere. I think I closed it, but pretty much there's a big situation going on with more spending or less spending. It really depends on what happens and the outcome of the coalition. So definitely keep your eyes on that. A lot of Trump speeches, but the main big news is were the United States GDP, which 2.3% as expected. GDP, the Canadian GDP actually increased, so it definitely was boosted last quarter, which is very good. The core PCE, the United States core PCE, is the preferred method of measuring inflation for the Fed, and that was also as expected, 0.3%, with Chinese manufacturing PMI above expectations and non-manufacturing meeting expectations. Manufacturing PMI for China really it tells a big story, not just for China but for Australia, for New Zealand, for all these other not much New Zealand, mostly for Australia, but really for any country that imports things like iron to China to boost the manufacturing. So definitely Australia will be affected by that. And for next week, having a look, we can see the core CPI has already came out at 10 a.m. on today, Monday, 2.6%. So inflation is falling down. It did not meet forecast. It is 2.6%. However, I will get back to the euro in a minute. Manufacturing PMIs really all across the board for all these countries this week. Australian retail sales, an Australian monetary policy meeting. So definitely an update on interest rates and if they're going to hold or cut, which I'll get back to. The Bank of Japan Governor Ueda will be speaking today, so more updates on potential hikes. Swiss CPI, we have been struggling with inflation for a long time, but we'll see. It is expected to rise, to rise a lot, and I'll get back to that. Australian GDP quarter on quarter, and really the big news for euro are cutting rates most likely. Yeah, they'll be cutting rates as forecasted. I'll get back to that, and the biggest news for the dollar is the unemployment rate and the non-farm payrolls as well, and also Chinese CPI and PPI as well. So a lot of news this week to look out for. A lot of quantitative news. As for qualitative news, not much has changed since the last week, but we'll get back to this. So having a look at each currency. So the dollar, as you can see, has been declining for a very long time. So really, ever since the 10th of January to the 21st of February, it has depreciated, which is very contrary to fundamental analysis. The fundamental analysis, if you look anywhere, it should say that the United States dollar should appreciate, which the charts has not been expressing that correctly. However, there has been a big surge of appreciation over the past 2 weeks, and really, it's just supply and demand, guys. It's just people want to buy at cheaper prices. So, for example, this area here, where a lot of people this area here, a lot of traders deemed this as a very as a good price to buy. However, it was when the data comes out, the market deemed this as not a bargain or not cheap enough for big buys. So hence why the United States dollar kept depreciating in order to find a good price to buy. And as you can see, obviously, throughout the past year as well, the dollar has appreciated significantly. And if you really look at fair value, definitely from for a year's perspective, you can definitely see that it's still considered not fair value when it comes to since the 24th of September, but As for this year, definitely, I would definitely say that it came to a very good cheap area. And as for the fundamentals, the Fed seem very restrained on monetary policy. They don't. They are going to keep holding until more information and comes out about the tariffs and what Trump's policies. And like I said, either his tariffs will be enacted tomorrow or it'll be enacted in a month's time. But for the meantime, the Fed will be wanting to hold. For the euro, as you can see, a big appreciation for the euro. Euro is one of the euro. The ECB are one of the central banks that are going to be cut the most, and as we were talking about the rate cuts this week, they are going to cut this week, as well as a few more rate cuts will be happening. But a lot of articles are saying that after June they don't have a clear path on monetary policy. So it does seem like they're going to hold for a very long time, take a big pause on rate cuts, which can definitely initiate a big appreciation for the euro. But until then, we still have a few more rate cuts for that. And like I said, a lot of this appreciation is from the German elections, definitely, and as well as a screenshot of an article that I came across saying that the euro is also now in competition as an alternative safe haven currency. Well, definitely, the euro is not an official safe haven like the US, the dollar, the Japanese yen, the Swiss franc. However, I guess some people, some maybe big institutions are also looking at the euro as an alternative. So definitely, another reason to buy the euro if you do wish to. As for me, as for HPD, I think we are looking for sales. However, short-term buys are definitely something to look out for. Japanese yen, a lot of appreciation, due to the hikes. We don't have much more information apart from they're going to hike maybe 2 more times. We'll see. We just don't know when those dates are, but I think by the end of the year they do aim to hike 2 more times. And with this week's, with Ueda speaking this week, we'll definitely get more insight on that. It has been some depreciation, but that's okay. There's a lot of it's just going to pullbacks. Not really a big deal. Just look for cheaper areas to buy if you are going to buy, and if you're going to sell the yen, look for areas to sell. Again, look for price to retrace upwards for you to sell. One fundamental analysis I did, that is one article I did look at, was the Bank of Japan's approach to buying bonds. So pretty much. As the Bank of Japan are hiking rates, that will also increase, the yields, the government bond yields, and the yields are the interest rates that the central banks place are short term, whereas the yields are like the 5-year yields, the 10-year yields. I can show you here. These are long term, so these are what this is the interest that the governments will need to pay for borrowing money. So definitely, Ueda was talking about how if it's in their interest to not have yields go too high because they do want cheaper borrowing still. So definitely, maybe that's one of the reasons why the yen is depreciating. They don't want the yields to go too high. They are going to buy bonds, and if you know how bonds work, when there's a high demand for bonds, when a lot of bonds are bought, the yield goes down, and how a lot of bonds are sold, the yield goes up. So maybe that's a reason why the yen is depreciating. If you're looking for sells, maybe that's a good reason for to sell, But if you're looking to buy as they're hiking, just look for retracements, guys. That's all I can say. The pound has absolutely surged. Really, one of the big reasons is because they are going to, needing to pause, rate cuts. So reading this article here, it talks about the fears of inflation may cause the Bank of England to pause rate cuts, And apart from that, I'm not too sure exactly why the bank of sorry for the pound to appreciate so much. I definitely know that they're but I think last week I read an article where it did say that they are going to maybe reduce the number of rate cuts, but definitely a very massive movement for the start of the week for pound. So definitely we're going to see more information regarding why the pound has been a buy since the 17th of January, and it's very interesting as well because the inflation has risen to a very high 3%, and also because and then the worries about stagflation and recessions has really you know driven a very negative perspective on the pound. However, in terms of the index, the currency index has appreciated you know substantially, like insanely. So definitely something to look out for. I don't think you could definitely look for sells, but if you're going to hold rates, I guess look for pullbacks for buys. But um, I don't have a personal bias on this. I'm just going to wait until see to get more information. I like to enter if I enter trades. I like to enter trades where I have a very good understanding of the fundamentals. With the pound, I don't have that at the moment. So definitely we'll keep you guys updated next week. For CAD, like I said, the tariffs either tomorrow or next month, we don't know. But for the past since August, the Canadian dollar has been auctioning, and I think actually the pound has actually also been auctioning as well, with a break of auction in December. We could definitely see the same thing happen again. Maybe that's a good reason for sales if people are auction support and resistance. They look for auctions and stuff. So definitely same thing for Canada. Um, if you're looking to buy because of the Canadian dollar is at a cheap area right now, definitely not a bad shout. However, with the tariffs and stuff, with the uncertainty of tariffs, it might not be a good idea, unless you can you can look for pullbacks, maybe to the short term buy, or look for pullbacks for shorts. But more information, guys, is needed for CAD. We'll let you guys know soon. For the Australian dollar, uh, you know, similar thing. Really, all these currencies right now are auctioning, and because of the uncertainty of the world, a lot of uncertainty right now regarding tariffs and regarding the Ukraine situation, and as much that might not affect the Australian dollar, definitely. It's very interesting because they were actually looking to not they were very data dependent, and I think they only priced in maybe 2 rate cuts this year, not too many, as expected since previously. But definitely, since they are still cutting and they are really beginning their rate cut cycle, the depreciation of the Australian dollar, as well as maybe some news that came out last week. I'll double check. I do believe I did see some news that come out. I think it was. Give me 2 seconds, guys. CPI. I see. So the inflation dropped more than expected, which maybe promotes more rate cuts to boost inflation. So yeah, apart from that, I'm not too sure exactly. So you can look for buys now if you compared to if you wanna buy the dollar against weaker currencies, maybe the New Zealand dollar, you can maybe look for buys. Not it wouldn't be a bad idea. Or if you want to continue the shorting the dollar, the Australian dollar, just look for retracements again, guys. The New Zealand dollar, same thing, very similar to the Australian dollar as well. Chinese news as well, definitely the China affects the performance of the New Zealand dollar and the Australian dollar. They are still, they really remain one of the central banks that will cut most. They did say that they're going to stop cutting by 50 points now, and they're going to continue cutting by 25 points, and we still have a lot of rate cuts to go, guys. So I have really no reason to buy the New Zealand dollar. I would just short it or look for retracements. If you want to do short-term buys, play the other game, then definitely not bad. And for Swiss, appreciation for the Swiss. Normally, it's very interesting. The Swiss franc really works very differently from the other central banks because the main objective of the Swiss National Bank is not to is not to increase inflation, whereas that is a priority for them, and it's definitely a bigger, like, inflation and higher inflation is more of a priority for the other economies and central banks, and more GDP. The main priority for the Swiss franc is to really just to devalue the currency, because they deem the currency too expensive, and definitely they deemed this zone here as expensive, in 2024, and now that the Swiss franc has devalued, they can definitely deem now this area as expensive, and this area, obviously the previous area, is very, very expensive. But when inflation doesn't hit doesn't meet their expectations, what we actually see is the franc um, increasing in value. Whereas if it was, if for example it was the euro, and the euro inflation wasn't rising, the euro would actually fall, because they would price in more rate cuts. Whereas the Swiss franc are pricing in more rate cuts, but because of their priority of devaluing the currency, the opposite happens. The Swiss franc actually increases in value, which is very, very interesting. Very different from all the other currencies. However, if the Swiss franc, the SNB are expecting the inflation to hit 0.5%. Where is it? Let me double check that. Yep. So previous is a minus 1.1. If it hits 0.5%, it's a big, big surge in inflation. And if that happens, then definitely we can see the Swiss franc fall. And definitely right now is a good time to buy the franc. However, obviously with uncertainty with inflation, maybe it's better to wait. Up to you guys, obviously. But right now it's at a very good level, with potential to go both, to go upwards and downwards. And yeah, guys, apart from that, there's not much more. It's just a lot of more data that needs to come out. A lot of uncertainty. So that's all we gotta really talk about. So with that being said, guys, thank you very much for watching this video. We'll keep you guys updated. Next week, hopefully some more videos. Even within this week, we'll see what we can do. If you guys want anything, if you want any more information about anything, just let us know. Put it down in the comments. And yeah, guys, thank you for watching. Have a nice day.